Dear viewers, welcome to this episode of Your Life, Your Money. What is that I have brought for you in this episode? I'm going to talk about the age band 45 to 55 and the 10 things that you must focus during this particular age group. Every point that I'm going to discuss in this video is super important. Stay till the end of the video. Focus on this. If you are able to do that, I don't see a reason why you should not pass this life with flying colors. This is NRI Money Clinic for you. And I'm Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Age 45 to 55 is second innings of your career. You played the first innings between 25 to 35. You gained experience. You could have played well. You could have played not so well. Now, people can be grouped into two categories at this age. One, people who are suffering, getting into a midlife financial crisis, or there could be another group which has played the first innings well and could be thinking to do very well during the second half. They could be in a camp which is moving towards complacency. Both set of people have to play the game in a different way. The rules of the game for both the people is one and the same. Let's look at the 10 points on which you have to focus now between this age 45 to 55. Step number 1. Evaluate your life. You have played your first innings 25 to 45. Sit with your spouse and get into a conversation and find out what you did well and what you did not do well. Learn from your mistakes. If you have done the mistakes, now you need to know what mistakes you should avoid. Have you used excessive credit cards? Have you failed to plan? Have you done things very well? Have you failed to enjoy your youthful years? Make a list of all things which gives you happy memories or the memories which you like to forget. So this will become a ground for you to design your game beyond this point of time. Both you and your wife have to do this exercise. Make a list, write down, then only we can move to the next stage. Step number 2. Make a list of your assets and liabilities. 20 years of your working prior to this age has made you acquire assets, have some liquid assets in the form of bank FDs, mutual fund, something in NPS, a few parcels of land, or you could be having an end of service which is built into PPF, or it could be anything. This is the time you make a list of all the assets that you have and put a monetary value against it. If it is a liquid asset, you know its value. Your insurance policy will have a value, mutual funds will have a value, stocks will have a value. If it is a land, you should put a valuation. If it is your end of service benefit, you should have a valuation for that. Total it up. Now on the other side, you put all the liabilities that you need to clear beyond this point. It could be the cost of education for your children. It could be clearing that car loan. It could be clearing the EMIs for the house that you have purchased. You could be having other liabilities in your life. So list the liabilities too. Try to match the assets and liabilities. See whether you have got more liabilities or whether you have got more assets. If you have got more assets, at least you look to be safe. If your liabilities are more and the assets are less, that means you do not have much of a risk-taking ability beyond this particular point. So this exercise must be done and you should evaluate your risk profile now. Point number 3, engage a financial planner. Whoever you are, you could be a person who do not have a financial advisor. You could be a person who could be a do-it-yourself investor. Irrespective of your situation, you must engage a financial advisor at this point of time. If you were to be a do-it-yourself investor, you would have done. You have got certain results, but that's what you thought was the right thing. Your financial planner can have another view. Remember, if you are a do-it-yourself investor, you could be doing things only from a return angle. There are other perspectives when you build your family finances. You should speak to the financial advisor. As a do-it-yourself investor, you will not have experience. See, how will your retired life be? You can never have the experience of it. You should speak to some people who are already retired, or you should speak to a financial planner to know what things can happen during your retired life, and you should take those meaningful steps today. If you are a person who do not have a financial advisor or you have not done anything on your own, it means that you must need a financial advisor. If you were to be a disciplined investor, or if you are a person who could have been a do-it-yourself investor, if you have not done in the last 15-20 years, the chances are you will not start it now. So you need an external force to handhold you, pressurize you, take you the route where it should go through. You must need a financial advisor. If you have a financial advisor in your circles, take their assistance. If you do not have a financial advisor and you want to engage a financial advisor right now, you can make best use of services provided by NRI Money Clinic. We have team of experts who can cater to different achieving the life goals. We have a lot of experts. You can make best use of advisors under our fold. If you have that intention, all that you have to do is reach out to us through a WhatsApp message. Our number is shown here in the description box. We have also given a link there. Just click on the link, send your message, and our team of experts are always ready to help you on that. Point number 4, review your insurance needs. It's a must. Between 25 to 45, you would have taken up a lot of insurance policies, and you could have taken it for a very short period of time, or you could have taken it without the adequate cover. All that you have to do now is find out how much of life insurance coverage you have. Don't look at how much money you are paying into the policy. The right way to look at is, irrespective of the type of the plan, what is the sum assured I have? If something were to happen to me, how much is the money that is going to get paid to my dependents? Total sum assured that you have. How long this sum assured is valid? You are 45, and if the sum assured goes away at age 50, that will not be sufficient. So find out till what age this sum assured will be active. Now go back to the previous steps. Find out whether your assets are more or liabilities are more. If your liabilities are more and these liabilities cannot be covered with the existing insurance that you have, it's time that you buy the required insurance even at this age. But buying insurance at 45 years and above is a tricky game. It is not going to be cheap anymore. It's going to be pretty expensive to buy the insurance cover. What you can do is you can calculate how much insurance you need, and instead of buying that insurance for a long period of time, you could be buying that for a shorter period of time so that your premiums will remain low. If your finances do not permit and you cannot afford to pay a large insurance premium, all that you have to do is, look, I need an insurance cover for 2 crore rupees, but I cannot afford it. So try to buy 1 crore, or you can try to buy 50 lakhs. So you have to hedge your position. If something were to go wrong, your families will be put into difficulty. I cannot give them the full insurance cover, but at least a portion of your risk be transferred to the insurance company. This must be done. Do not put away insurance because you have reached 45. See, if something were to go wrong, if you were to suffer a critical illness, or if you were to suffer because of any particular disease, a road accident, anything could be, your families will be put into deep distress because your assets are lesser, your liabilities are more. Point number 5, your retirement is visible now, and retirement planning is a top priority. If you have already started your retirement planning, try to build on it, increase it. The simple thing to keep in mind is, higher the amount, the better. If you have not yet started, if you do not start now, your retirement is not going to be a bed of roses. It is going to be the most troublesome period of your life. You have to prioritize your retirement planning over and above your child education. If you are put into a conflicting situation that I need money for my children's education, I need money for my retirement, you have to prioritize retirement planning. Your children's education can be done using student loans. That's a possibility. You have to put more and more money towards retirement planning right now. At 45 years of your age, your life is a one-day match. At 50 years of your age, it's a 20-20 match. The shorter the time span with which you play this game, the asking rate increases. The chances of you hitting the success or becoming a loser will become obvious. So if you are beyond 45, make no mistake here, put more and more money towards retirement planning. How to do the retirement planning? It's a very complex thing. You must need a financial advisor. It's not easy to plan the retirement that easily. Most people get confused with the thought that retirement planning is having a lot of money. Money is important. It's just not having money will create a very happy retirement for you. So you need to be speaking to your financial planner. You need to be providing a larger resources towards your retirement planning, and it just cannot wait, and start that today itself. Point number 6, a home to live. Since the retirement is going to be visible now, you should have developed a clarity by this. Where are you going to retire? Which country you are going to go and stay? Which city you are going to live? Develop that clarity. If you still don't have a clarity, within next 1, 2, 3 years, you must develop that clarity and think about buying a house or building your own house. As the days come closer to your retirement, it is obvious that you must have a house to go and stay. During your initial years of 25 to 45, you could have bought a house in different places. You could have plots of land. Let's say that you have a house in Mangalore and you have no intention to retire in Mangalore and you decide to live in Mumbai. Your focus should be on how will I have a house in Mumbai? And you can start getting out of unwanted real estate which is spread across different places, different buildings, different plots of land, and use the resources to build that house that you have to live during your retirement days. Focus on it now. The best way I would suggest is, if you have multiple real estate in different parts of the world, think about the real estate that you don't need and dispose it off and use that money to build a house where your retirement will happen. Point number 7, children's education. It's a very emotional issue. Children are the darlings in the home. You have to fund children's education. Many people do the mistake here. Remember one thing. Sending your children to great institution itself will not create success in their life. If they are deserving for that, if they are intelligent enough, if they qualify on their own, it's perfectly fine. But do not fall into the trap of spending enormous amount of money just to send your children to great schools. Instead, create a desire in them that they have to excel in life. If something is a shortage in their life, it creates a desire in them. You try to give them each and everything, probably that drive they will lose, and whether they are going to be successful, failure, we cannot tell anything. The conflict that will arise here is, I need so much of a money for children's education. I haven't done my retirement planning. What shall I do? First, attempt the retirement planning. Your children's education must be attempted using taking the educational loan. Government has got so many schemes now. Children can study using the education loan. When your children cross 10th standard or so, you should inculcate a thought in their mind that they should study taking the education loan, and the responsibility of clearing this education loan should belong to your children. Children of today get employed by 22, 23, 25 years of age. They'll have lots of money in their hands. They don't get married and they waste these resources. Instead, if they take the responsibility of clearing the education loan, it will reduce the burden on parents and it will help them to allocate the resources towards retirement planning. Every person who is watching this video, I cannot say that they are the lucky ones who will have a large amount of cash flow in their life. There are a lot of people at the lower end of the pyramid who will struggle to strike a balance between retirement funds and the education planning for the children. So children should come forward and take the education loan. And as a parent, you should nudge your children towards these thoughts. Don't do the mistake of overspending on children's education and neglecting your retirement planning. Point number 8. Your health insurance. By 45 to 55 years, your body will have guests in the form of lifestyle diseases like diabetes, blood pressure, cholesterol, arthritis. It could be anything. Evaluate your health condition. If you are a healthy person, if you are an NRI, then you should try to take a health insurance 2 to 3 years before you go back to India. But unfortunately, if you are a victim of any of these things or any other lifestyle disease, I would suggest think about buying a health insurance plan right now, just for the reason that at a later point of time, you may get it or you may not get it. Many people suggest that you should buy a health insurance because the cost will rise over a period of time. That cannot be avoided. Health insurance is not like life insurance. The insurance premium you pay in case of health insurance follows the age band, 25 to 35, 35 to 45, and beyond that point, every 5 years or every 3 years, your premiums will keep moving up. The issue is, can I get a health insurance or not? That's the biggest problem. If you are still in doubt, all that you can do is buy a top-up health insurance plan. Thereby, you can keep the premiums low. If there were to be smaller claims, you can manage with your finances. If there is a larger claim that will come, the top-up plan can take care of it. Top-up plan is a plan where you buy a large health insurance cover, but you will say, I will not accept the first few lakh, 1 lakh, 2 lakh, 5 lakh, as per your policy terms. You will say, I will not make a claim on this smaller claims, but if there were to be a bigger claim, that is the time I will make a claim. What is the advantage of buying a top-up plan? There are 2 advantages. One, you are transferring the bigger risk to the insurance company. You will keep the premium that you pay for the plan a much lower level. The third advantage is, when you buy a top-up health insurance plan, one thing you are very assured, When you come back to India, if you don't get a health insurance at that point of time, at least this top-up health plan can continue and your bigger expenses toward your health insurance can be transferred to health insurance company. Point number 9. Restructure your real estate portfolio. I do fact finds with lots of people day in and day out. People keep coming to us and we keep evaluating people. It's obvious, it's normal for me to see people have multiple real estate between this age group of 45 to 55. They have purchased some small pieces of land here and there. They have got multiple houses. All these things are quite common at this particular age. My best suggestion for you is restructure this real estate portfolio. Why have you kept it here? Do you need it? Can you manage it? When you retire, you are an older person. You can't go behind it. You can't run behind people to sell it, to rent it, to move from one place to another place. Decide what do you want to do with this. If you want it, and if you have purchased it with a need base, that is, I'm going to go and live there, or I have purchased this because my parents have to go and live there, leave it as it is. If it is an unwanted real estate, liquidate it and move it into either a financial asset or the fractional commercial real estate. What is the advantage you get? One, cleaning up. You don't have to remember, maintain, find a document, keep searching. All these things are not there. It will simplify. When you move your assets to financial asset, it could be an FD, it could be a mutual fund, stocks, NPS, retirement plan, you name it, annuity, you can control it with the click of the button. And the money that you have in the financial assets are available to you on call. What is the advantage you move it to a fractional commercial real estate? When you move to a fractional commercial real estate, it will start generating an income for you immediately. See, at this age, you are in a high income phase as well as a high expense phase. The chances are that sometimes, in spite of a higher income, your expenses could be higher and you will not be able to meet that requirement of cash. So if you have a second income in the form of fractional commercial real estate, then it can add to your income and it can reduce your burden on cash flow. So that will be very helpful. Likewise, before you retire, if you have developed this portfolio of fractional commercial real estate, which gives you a good handsome return, then it can become a preparation for your retirement cash flow as well. We have done detailed videos on fractional commercial real estate. You can go through the playlist which we have created on our channel here. I think we have done 6-7 videos on this particular subject, how fractional real estate works, what is the rents you get, how do you make return, your regulations around it. Every question that could be there in your mind are answered in these videos. Search through the playlist and you will get these videos. Point number 10. Keep a control on your lifestyle upgrade. It's obvious, 45 to 55, you are at a high income phase. You are moved up the ladder. You could be in a much better position. You could be competing with your colleagues, your friends, or your relatives. Try to move up the ladder. It has two consequences. One, it creates a drain on your cash flow. It increases your cash burn. You earn an X amount of money and the Y is your cash outflow. Chances are that the Y may increase beyond X, which is your income. This is one risk point. The second risk point is you will get adjusted to this new lifestyle, and by 60 years when you retire, you don't have this cash flow and you will start feeling fish out of water during your retirement days. The other major problem with the upgrade on lifestyle is your children may get habituated to this lifestyle. You do not know what could be the life of these children. Probably you could be sowing a seed of failure in the life of your children. Children will follow the parents. They get emulated from the lifestyle of their parents. They will see what values my parents live with, and children will try to copy that. So when you increase your lifestyle, be very, very mindful of what impact it will leave on your children, what impact it will leave on your cash flow, and how will you manage when you retire and you don't have a cash flow. So be very careful about increasing your lifestyle upgrade. Dear viewers, I would like to hear from you about your thoughts on the 10 points that I have raised. What do you feel? Do you have a differing opinion? What have you seen in the life of people who are between 45 to 55? Do you agree with these points? I would like to hear from you. Leave those comments in the comment section below right now. Dear viewers, hope the video that I have done today helped you to understand the points where you have to focus if you are passing through this age band of 45 to 55. If it did give you the right direction, don't forget to give me a thumbs up. If you are watching my channel for the first time, or if you are yet to subscribe for the channel, please hit that subscribe subscribe button right now and press the bell icon. Do not forget to share these videos with your friends and relatives, near and dear ones, and on all the WhatsApp groups on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you next Friday with yet another thought on your life, your money. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.